Hello everybody, I Tushar Jain, CFO and Research Head of Ajayastromoneyguru. Welcome all of you today on 24th January 2022. In this episode, I will discuss about my views on Indian stock markets and what all things you need to consider for next few trading days. So friends, let us first look at the global markets. On Friday, the US markets fell drastically, and if we see its indices, then we can see that all the three major indices of the US were significantly down. Dow Jones was down by around 450 points, Nasdaq was down by around 400 points, and S&P 500 was down by 85 points. And all these indices were down by more than 1 to 2%. And also, if you see the Asian markets are also have also shown the weakness during the opening, but after that some recovery has been seen from the lower levels, and currently as on 12:45 p.m. the Asian markets, the Hong Kong is trading at around 1.20% down. Shanghai index is currently flattish, and if we see the Nikkei is have been closed at the level of 27,588 and was marginally up by around 66 points. And also, if we see the indices futures of the global markets, we can see that the US futures are almost up by around 0.5%. And if we see the FTSE, that is the London's index, its future is up by around 0.32%, and similarly marginally up by around 23 points. And also, if we see other European markets also, they are also marginally up by around 0.25 to 0.50%. And if we see Nifty is trading at around 17,231 right now, and till now it had made the low 17,213, which is below its 20 days, 50 days and 100 days exponential moving averages. The nearest DEMA is of 100 days, which is at the level of around 17,360. And Indian markets are showing significant weakness, and Nifty is currently down by around 384 points. And if we see Bank Nifty is also down by around 600 points. Although the weakness is more in Nifty as compared to the Bank Nifty, and if we see the constituents of the Nifty, almost all the constituents of the Nifty are down except Cipla and ONGC. And if we see the India VIX also, it is up by around 20%, and it has crossed the level of 22 points, which is very alarming situation for the Indian markets. All the major constituents including Wipro is down by more than 4%, Titan is down by more than 4%, Tech Mahindra is down by more than 4%, Tata Steel is down by more than 4%, Tata Motors is down by around 4%, Tata Consumer is down by around 3.8%. And also, if we see JSW Steel is down by around 5.5%. and Hindalco is down by around 5%. Almost all the major indices, major stocks are significantly down, especially the auto sector. And if we see the Nifty Auto, it is down by around 2.26% by around 260 points. And the major reason behind the fall is primarily of the FIIs selling. FIIs are continuously selling by around 3,000 crore, 4,000 crore on a daily basis. And the matter of concern more is that the DIs are not purchasing significantly. Although if we see the FIIs sentiment from the last around 8-9 months, in fact from April 2021, they are continuously selling on a monthly basis. But still the Nifty has managed to cross new all-time highs and maintain the level of 18,300 and 18,500. That was because the DIs were continuously buying it during those months. But as of now, especially from last 1 week, the DIs have not bought significant in a big quantity, as compared to the FI selling. Therefore, the weakness is being seen in Indian markets, and this selling can be because of the discounting of the two major events which are lined up especially for the Indian markets, which will start from tomorrow, that is from Tuesday. And the second major event is of the Union Budget of India that will be declared by the Finance Minister on 1st February 2022. So these are the two major events which the investors are discounting, and the two possible expectations which are going to be there. First, from the Fed meeting, that it is expected to raise the interest rates by around 25 basis points, and second expectation, or in fact rumor is there, that in the Union Budget of 2020 to 2023, the finance minister is expected to increase the long term capital gain, which will ultimately affect the big institutions. Therefore, they are booking their profit to save some taxes as per some rumors and some expectations, and the exact reason is still unknown. These are some rumors or expectations by the market. So these are the major events and major analysis for the current market situation. I hope you liked our analysis, and that's all for the today's episode. See you in the next episode. Thank you and good day.